Welcome Bitcoin friends, it's Bitcoin Mamo. So we're going to look at the Bitcoin charts, do some TA, and on the screen here we've just got the Bitcoin price as we were getting the announcement on the new interest rates and also during Jerome Powell's speech. And we did see some volatility after the announcement of a 0.75% increase in the interest rates. We initially did come down here and then did get a move to the upside. And then Jerome Powell's speech and question time started around here. And then we did slowly come back down as he did sound more hawkish than dovish. And there were a few contradicting things in his speech. He did say they could possibly slow down the rate rise amount sometime next month or the following month. But then he did also reinforce that there's more rate rises to come until they can get inflation back down to that 2% level. So I think it does depend on what the inflation numbers are when they next come out. And perhaps we see another 0.75% interest rate increase next time, and then maybe a couple of 0.51s, and then maybe 0.25s for a while. But again, it's all going to depend on if inflation does start coming down or not. But as mentioned in the previous video where we looked at the more higher term timeframes for Bitcoin and also the stock market, in this video we'll look at the weekly time frame and the daily time frame, a little bit at the 4-hour time frame. We'll also look at the total crypto market cap and the Bitcoin futures chart and also market cipher. So just looking on the weekly now, we do have this big spike on the VPVR, amount of volume traded at certain price levels. We do see a significant amount of Bitcoin changing hands here between 21k and 19k approximately. I do still think this is the base where we do bottom out here. We have also spent around 4 months without making a lower low here. So it definitely does look like we're forming a base. And as mentioned in the previous video, we also broke this macro falling wedge pattern, which also adds to the confidence that this was the bottom at 17.5k. We do have 2 order blocks here from these red candles in an uptrend. And just zooming in a bit more, we can see how these have acted as support. We did actually make another order block here from this red candle in an uptrend. So we have reclaimed this order block and now we are testing this higher order block here. And we did have bullish divergence on the weekly between the lows here. We did make lower lows on the price action while making higher lows on the RSI. And we have seen a bounce play out from that so far from around 18.8k to 20.5k. On the other side of that, we do have hidden bearish divergence. We can see lower highs on the price action while making higher highs on the RSI. And I don't think the hidden divergence is as significant as the regular divergence, but I think we will still get a pullback from that. And we are seeing a bit of a pullback at the moment after Jerome Powell's speech. So perhaps we might come back to this lower order block here, which would be between 19.2k and 19.4k. But it would be key to use this order block as support if we do come down here. Obviously, we lost it. We came back above it. Now we may come back and test it for support. And if we just switch to the daily time frame while keeping these weekly order blocks in here, I think we are in a bit of a channel here, taking it from the overall low here, just lining up the second low and taking it from the first bounce point. We can see we do have several touches on the bottom, several touches on the top. Again, these are alternating touches here. Potentially we come down back to the bottom of this trend line. That would be down at around 19.5k. And then we do have these weekly order blocks. Again, we're on the daily time frame, but looking at weekly order blocks. So perhaps we come into this order block and maybe wick into it and try to get support off this trend line and possibly keep traveling in this channel. But just looking at the Bitcoin futures chart now, we've got that same macro falling wedge. We are on the weekly time frame. We broke out of this falling wedge pattern, both on the RSI and also on the chart. And on the futures chart, we did make triple bullish divergence on the weekly here. We see 3 successive lower lows while making 3 successive higher lows on the RSI. Similar to what we did with the S&P 500 futures chart we looked at yesterday, that triple bullish divergence on the weekly. And again, this is quite significant, and I do think we do go a lot higher than just this move. but we will have corrections along the way. There is a key order block here on the futures chart from this green candle in a downtrend. We can see we have come into this order block. We'll have to see how the week ends here if we do close inside this order block or below it. Bottom of this order block on the futures chart is at 20,400. And to get above this order block, we need to get back above 21,250. We can also take a look at the total crypto market cap here. We are hovering around that $1 trillion market cap. We are still in this yellow rectangle, just taking the previous consolidation here at the start of 2021. We have spent about 4 months in this range. We did also have a similar macro falling wedge pattern drawn, but on the total crypto market cap, it is more of a channel. But either way, we have opened the week above that channel. And the key order block on this chart on the total crypto market cap is from this green candle in a downtrend. It's the only order block in this range, and we can see we did come down. We didn't close below this order block at any time. Has acted as support, and we did get a bounce from it. And just going down to the daily time frame now, we have that same macro falling wedge pattern. And in the video that was 2 weeks ago, we were around this area. We hadn't broken this falling wedge pattern in red yet. We did mention we'd had 2 touches on the top, 2 on the bottom. Again, counting it in alternating touches here. We said generally on the 3rd touch to the upside, we break bullish. And we did break this falling wedge pattern and have this nice move to the upside. Now we are in this channel as mentioned previously. We do have several daily order blocks here. We did have this order block here, which was from all the way back from this red candle in an uptrend. This seems to be a significant order block. This was quite a strong uptrend. And then we did take a pause. There were buyers and sellers here. Time was spent here and volume. So this becomes a key area of possible resistance. We are getting this push back down, and we also have a couple of order blocks lower down here which do line up with the bottom of this parallel channel. So we'll be looking for this to act as support if we do come down here. And the other thing to take note of is looking at the daily EMA ribbon. This is a collection of moving averages. We can see we have broken above this ribbon and we are coming back down to test it. We can see we did struggle here on these attempts. Once we did break above it, we came back into it, looked for support. We didn't get that support. Once we closed below it, we started that downtrend. And on this case here, we did a similar thing. The key thing to watch with this ribbon normally is we want to get above it. We want to see it flip. So we want to see the smaller average in yellow move above the bigger red moving average. And then for us to use it as support off that yellow line. And that indicates a more bullish price action. We'll go into that with examples on another chart. The other thing to note here is doing a fib retracement, taking it from our top here at 25.2k down to our low. We do see that 382 fib level is in line with the area where we're getting this resistance. And what we also see is if we do a fib retracement from the top of this bounce here down to that same low area, we actually see the golden pocket in line with that 382 fib and this daily order block. And this is pretty much where we have gotten this resistance, and we are now pulling back down. And this is interesting because if we do look at this comparison again, like we did in the last video, this is our current bull and bear market here. And on the bottom is the 2013 bull run and 2014-15 bear market. And we noticed a lot of similarities with these two. But if we actually just zoom into this bottoming price action here, at the bottom of the bear market where we've consolidated for quite a long time, and compare it to our current bottoming price action here, and look at it on the daily time frame, that gives us this picture. This is the bottoming pattern. This is our 17.5k low, our current price action. Again, this is the 2014-15 bear market right at the bottom of the bear market. We notice a similar pattern here. I've just got lined up the top of the dead cat bounce with our dead cat bounce here, also the bear market low on both charts, and also the low on this pullback. But what we see is this is our current price action again. We looked at those fib levels in confluence. So from the top to the bottom here, we had that 382 fib level. And from this top down to the same bottom, we had that golden pocket. And that's where we're currently getting that resistance. We do compare it to the 2014-15 bear market down here, do the same fib levels, take it from the top of this dead cat bounce, similar to this one, take it down to the low. We see that 382 fib level, taking it from the top of this dead cat bounce. You could do this one or even this one. Either way, we do see that from this high down to the same low, that golden pocket also lines up with the 382 fib, and we also did get resistance at this point. We also see this white line here. This diagonal white line is both of the falling wedges on the macro time scale. We broke both of them at a similar point in time here. So it does look very similar, same resistance at the same fib levels. So we could possibly be in this area, and perhaps we're going to come back down near the lows, which would put us somewhere back in the mid 18,000s. And then perhaps we get that bounce we're looking for, coming back up to that previous high on the dead cat bounce, which would be for us around 25, 26K around Christmas time here. We could also be in this area if we are comparing them, where we did get a smaller pullback, and then once we did reclaim these fib levels, we did push higher. So if we do come back up here and get above these levels, above around 21.2K, I would expect us to come up and come to that 25, 26K area, keeping in line with the fractal of the 2014-15 bear market. You can also pull up that daily EMA ribbon, and if we just zoom in on this current price action a bit more, make it a bit clearer. As mentioned, we are above that EMA ribbon, looking for it to act as support here. The ribbon is trying to flip with the yellow moving average going above the red. This occasion here, we didn't quite get that high above the ribbon, and it wasn't close to flipping yet. But if we do look at this occasion here, we got above that ribbon clearly. We were above it clearly here, also around those two fib levels, around these two fib levels. And on the pullback, we got support of the daily EMA ribbon and continued higher to previous highs. So again, we could be in this position or we could be in this position. We'll have to see how it plays out. If we do get support here and get a bounce, then it would look more like we're in this position and we are going to have a bit more of a run to the previous highs at 25, 26K. And just a quick update on the price. That previous content was made before the daily close came in. So we were watching this EMA ribbon here on the daily time frame. And we mentioned we were looking for it to get support off this yellow moving average. We can see we pretty much came to the top of the ribbon and we have had a nice bounce from that. So far this is looking okay. Let's see if we can get some continuation. And again, we're looking for a similar thing to what happened on this occasion where we did come back and got that bounce off the EMA ribbon as it did flip with the yellow going above the red. And we got that continuation move towards the previous highs. But I think that's about all for today. Hope you enjoyed that analysis. We'll see how this plays out if we are going to do a similar thing and pull back down near the lows before having that run, or if we are in this position, we're just going to have a smaller correction and eventually come back up and try to reclaim these fib levels and have more of a bounce sooner. We'll have to see how it plays out, how the stock market continues to digest the interest rates and Powell's speech. And perhaps I'll do a separate video where I'm just looking at market cipher, as I want to try to keep, as I mentioned previously, these videos a bit shorter. So thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.